Yeah. Hi everyone, my name is Pauliina Meskanen, and yeah, welcome to Arctic15 and also this panel on climate tech funding landscape. Yeah, I'm the moderator of this panel, Pauliina. I'm an entrepreneur in residence at Lifeline Ventures. That's a Helsinki-based early-stage VC fund, investing across sectors, but climate tech being one of the big focus areas. Currently investing from the fifth fund of 150 million euros. I'm also the founder of Survival Tech Lab, a newsletter focused on deep tech and hardware climate innovation, so climate is close to my heart. And yeah, I'm honored to be sharing the stage today with these fellow amazing climate tech investors. So let's welcome Ben, Heidi, Mark, and Adam to the stage.
Hi.
Mark's just getting a microphone.
Nice. Now we're all here. Good. So let's start with short introductions. Could you briefly introduce yourself and also the fund that you're working with? Maybe we can start here from Ben, from SOSV.
Thank you very much. Good morning, everybody. Thanks for making it so early in the morning. So I'm Ben, I'm a partner at SOSV. We are a deep tech fund focused on early stage startups, and we mostly invest in climate tech and health tech. We've done over 100 investments in climate. And our model is to invest the first check at pre-seed and follow on at the later stages. And we support the companies with labs that we've established that help develop the product, the team, and the business. So that's us.
Good morning, everyone. My name is Heidi Lindvall. I am one of the founders of Pale Blue Dot. We are a climate tech fund based in Sweden. We are a pre-seed seed stage fund, so we invest in climate tech companies all around Europe and US, so normally around 500K to 2 million euros. We've been around for 3 years now and just raised our second fund.
Hi, I'm Mark from World Fund. I'm in climate tech or energy tech in the last 15 years. I was always focusing on energy and buildings. And that is also what I do at World Fund. We invest multi-stage into climate tech startups that have a high drawdown potential, carbon drawdown potential. We call it CPP. So we are European focused. That means we are investing only in European climate tech because we think that's a particularly underserved topic.
I'm Adam. I work for Albion VC. We're a UK-based seed and Series A B2B software investor. We're generalists, sector agnostic, but I've got a personal focus on climate tech investments and where software can be the enabler and the accelerator to the transition to net zero.
Yeah, awesome. Well, amazing to have you all here. So let's kick off with the first topic of discussing the current fundraising environment in climate tech. So what's been going on since last year, basically, the economic downturn, it really hit the VC funding in the tech market generally. So from Q1 2022, we've seen a decreasing VC funding volume for startups in general. But this trend has not really been seen in climate, but the climate tech startups and the funding, it seems to be more resilient. The climate tech funding has stayed more intact or even increased according to some resources. So based on your experiences, being there in the field and investing, do you think you agree with the data? And if so, what makes you think that the climate tech as a sector is more resilient rather than other sectors like crypto or fintech or B2B SaaS more generally?
Yeah, I can start. I think definitely, first of all, I would say that it's definitely affected, though, that we are seeing, especially that it's taking a lot longer to raise, specifically later rounds, so Series A plus. And valuations are down from a few years ago in climate tech as well. And yeah, there's a little bit less happening. So it is affected, but I still think, as you said, that it isn't as bad as the rest. And I think there's multiple reasons for that. But I think one of the main things is that a lot of these climate tech companies, they are actually solving real problems that are not going to go away. There's this urgency. There are these regulations pushing people to make change, and it has to be done now. There's raising consumer awareness that hasn't gone away with the crisis. And you know, we're seeing all of these corporates make net zero goals and say that we're going to be net zero by 2030. They have no idea how to get there. So none of this is going to change. And the way I see it is kind of you can simplify and kind of put startups in 3 different categories, right? There's candy, which is the kind of startups that, you know, it gives you something nice that you don't really need, but it's fun. Then there's vitamins, which is like, it's good for you, but again, if there's a recession, things aren't going well, it's not going to be your priority. And then there's painkillers. There's the real problems that you're solving for someone. And most climate tech companies, they go in that category. So I feel like we're going to continue seeing a lot of interest, and hopefully it's going to continue growing.
Yeah, I mean, I'd agree with that. As I said, we're generalists, so we see kind of all aspects of the market. And I think especially from the second half of last year, things obviously took a hit in the wider tech world. There was still, at our stage, seed and Series A, there was still a fair amount of deal flow coming on to the back of last year, but I think the first quarter of this year, you really saw it. I mean, everyone usually comes back from Christmas in January, and it's a big kind of deal rush, and that was markedly slower this year than in previous years. Climate was less affected, but I definitely do think I think especially the start of this year, there was a slowdown, and just generally things taking longer. Processes taking longer, evaluations taking longer, starting to see a slight hit on valuations like we saw last year in the rest of the tech sector. And I think, as Heidi said, a lot of the resilience of climate is to do with the urgency, and you know, we have a limited window to try and address this, and climate change doesn't care about recessions, it doesn't care about economic slowdowns. But I also think part of the resilience comes from the funds that have been raised over the past 3 or 4 years. There's been a lot of funds raised that are dedicated to climate tech that need to be invested, rightly so. And I think that's helping to give some resilience.
Yeah. So Ben, do you agree with Heidi and Adam?
I won't be very original because I do agree. However, I'd like to add a couple of things regarding kind of the macro environment that justify why climate tech's still going reasonably strong and has good line of sight. I think some of it has to do, of course, with the underlying, geopolitics, the fact that in Europe, energy has been a bit weaponized, and I think a lot of countries have, become very conscious of that. In the US, there's also the policy aspects with the IRA, which is a huge multi-$100 billion package that provides a line of sight in financing for deployment of large projects. So this is very reassuring if you're going to invest in companies to think, within a few years, they can access actually billions in financings from the government. And this type of policy is being more or less replicated in Europe and in other geographies. So I think this is kind of some of the macro thing. And I'd say also more fundamentally, you see just a general transition of talent into climate. Young people graduating, there's never been more interest in climate than today. And if you're an investor, your job is to sort of follow where the talent is going on building the next new things and the next important things. So I'd say even if you don't have a climate mission, you might end up actually going into climate as an investor because that's where the talent is going.
Right, exactly. And how about you, Mark?
I only can second what was said previously, but I want to add that the market is so huge, the opportunity is so huge that it's still underserved. Yeah, one might think that it's already maybe too much money flowing into climate tech, but it's still not enough. So we are currently at 16% what we should invest into climate tech to really get to our goals 2030 to cut our emissions by half. So I think it's just the beginning we're seeing here, and more money has to flow in.
Right. And so far we've been talking about VC investments, VCs investing into startups and that landscape. Now I want to also touch upon the fundraising environment of VCs and LPs, especially because we have Heidi from Pale Blue Dot, who just recently announced the second fund of 93 million euros. Huge congrats on that. So you were recently fundraising. Did you feel like this, like the economic downturn somehow affected the fundraising environment where you were fundraising for your fund?
Well, first of all, I would say that I know from a lot of people it is incredibly hard to fundraise right now. I know a lot of people who have really struggled, but kind of within climate, as we were saying before, there's been a clear change in the past 3 years. When we raised our first fund about 4 years ago, we had to tell people that climate tech was going to be a thing. We had to tell people that no, this is a big opportunity. These are all the things that are causing it to become the biggest sector. And we had to really convince them that this is not philanthropy. We're not throwing away your money. We can actually have great returns here. And that was really hard. And that was the biggest conversations we had at that time. Now, 3 years on, we're at a different stage where a lot of big LPs are starting to have their climate pockets. They're really starting to say, we actually want to put money into climate. But in Europe, there aren't that many players that have been around for long and have a lot of traction. So in that sense, I think, we were very fortunate because we're raising our second fund. And a lot of, in saying that, there's a lot of LPs who have been interested. So yeah, we were pretty fortunate for it to be a fairly simple thing, and really we're able to be pretty selective in who we actually want to have part of this journey. Also because we wanted to stay around the same size as we were. We felt like this is the ideal size for us, and this is where we think we can make the biggest difference with our team and with what we're trying to do.
Right. Yeah. Mark.
I only can second what you're saying. Since we already, we are still fundraising. We see that this knowledge, this is not a philanthropy thing we're doing. It's really a huge opportunity. We just published also a white paper about that, which you can find on our homepage, where we really lay out which are the opportunities to return higher REs than other investments with climate tech.
Yeah. Awesome. Yeah, please.
Yeah, kind of interesting to hear how things have gotten a lot better for climate, because in our case, we always have been kind of a deep tech fund focused on hardware and bio, and climate is one of the major themes, but it's not the only one we target. We do climate and health, and we're raising a new fund at the moment where things are going reasonably well, let's say. But sometimes we wonder, wouldn't the story be easier to pitch if it was only climate than if it was a mix of things?
Right.
And maybe also to recap for those of you not familiar with climate, what we're talking about. So climate covers basically new ways to make food, energy, transportation, industry, and a few other things. So it's basically pretty much the economy. So it covers everything. And as such, it's no surprise that there's more and more interest from corporates on one side, and also in terms of legacy on next generation from family offices.
Right, exactly. And Adam, I want to briefly also ask from you, since at Albion VC, you have these venture capital trusts, and there's a bit different kind of fundraising that is involved in there. Could you tell more about that and how it affects also your climate tech investments?
Yeah. VCTs are specific to the UK, and they are evergreen funds. They're listed funds on the London Stock Exchange, and anyone can invest in them. So they're not your typical LP, GP kind of structures. We have 16,500 shareholders rather than a handful of big LPs. And they go through a funding cycle every year, a top-up cycle, which means the funds are evergreen, which aligns us quite well with early-stage companies because there's no kind of exit horizon mandated in the fund documents or anything. There's no set investment period and then, an aim for exit, which means you can be very flexible and take a kind of long-term view, which, for early-stage companies, I mean, as VCs, we all want to invest and then, 2-3 years later, they've skyrocketed and, you've returned whatever, but and those stories are out there and they get, a lot of media attention, but the vast majority of investing at kind of early stages and like that, it takes, a decade to get to that kind of stage. We just had, not in climate, but we had a big success this year with a company called Contexa, but that took 10 years to get there.
Right.
Right. So just being able to have those long-term horizons just really helps.
So if I was to invest money on Albion VC, when I would be expecting to get returns, just thinking about the...
well, again, it's a slightly different structure because the returns kind of come on an ongoing basis through dividends. It's not a kind of set, 10 years and then you sell things and you get your returns. The returns come on an ongoing basis.
Yeah, awesome. Well, let's then turn gears and talk about the climate capital stack, because what Ben was already mentioning is that, well, climate really covers sectors. We have energy, we have transportation, we have agriculture, industry that we need to decarbonize, carbon removal, drawing carbon from the atmosphere. And we have different types of startups and companies, solutions that we need to build in order to achieve and tackle the climate crisis. It's software, it's hardware, deep tech, anything in between, it's infrastructure. And all of these different companies, they obviously have also then different projections to the future and kind of investment returns that we can expect from them. And what we also touched upon was that obviously like VCs are expecting to get those, get to those rocket ships and get the returns typically in a matter of 6-7 years, typical holding period. Let's talk about the VC fundability. Like when you are looking at investments, what boxes does a startup have to tick in order for you to say, hey, this is VC fundable, we want to invest? Who wants to start?
It's a really tricky one, to be honest. And I would say, first of all, that what we consider VC fundable at one time will be something that will change all the time. Like it's constantly evolving, that we're looking at a space and we're not really sure it's ready for VC, we're not sure they can mature, but then later we realize actually we probably should be investing in that space. So, but what we look at in general, I mean, there has to be the $1 billion opportunity. We have a 10-year fund, it has to work within that 10-year fund span. We have to make sure that we can have good returns within that. And then of course it has to be amazing founders, amazing potential, like that is the kind of normal VC fundability. But what we do is, we have Lindsay in-house, who's our climate researcher, who is amazing, and she really helps us try to figure out that is this a space, look at the research, look at the climate research, is this a space where we think that things can actually evolve enough for it to actually be mature enough to have those type of returns within our fund time. And it's really hard to evaluate that, and sometimes we think it's not and another fund thinks it is, and that's great, and sometimes we are hitting our heads against the wall because we just cannot see it happen, and we really would like to kind of invest in a space, and we think that maybe in a few years we can. I think it's a difficult question, and saying that, I think our fund, we are probably the lightest on the deep tech hardware from at least a few here, because we do, I think about 60-70% of our portfolio is on the software side, but it is also all three of us founders, we have a background in software. We know how to help those companies scale, and it's easier for us to kind of realize those type of returns. But I think we're doing more and more hardware from what we thought in the beginning, and we're getting braver and maybe more knowledgeable in the space and kind of trying to understand where we can invest in that space. But yeah, it's a very tough thing, I think, and you know, I would say that some of our investments, it's, you know, you don't know yet. Like the jury's still out on whether there are going to be VC returns in those spaces, and we'll find out.
Exactly. So Ben, well, SOSV is a deep tech fund, so you like to also invest in a lot of hardware. So would be curious to also hear your perspective on this and how you evaluate the VC fundability.
Yes, so we do invest in a lot of hardware companies. We also invest in a lot of bio companies. We were the first program to actually invest in synthetic biology and in things like cultured meat about 7 years ago when it wasn't even a thing. So I'd say aside from the usual, you know, billion-dollar opportunity, great tech, so tech-wise, we actually have a very technical team. We have like 5 PhDs on staff. We have a lot of experts, and we've done hundreds of investments, both in biotech and in hardware, so pretty familiar with a lot of things. There's a few additional criteria we look at when we evaluate founders in particular, and the things we like to see is, particularly you know, in those categories that take a long time, we want to see grit. And it's difficult to evaluate, but you know, when you look at how they got where they are today, that sometimes gives you a good indication. The second criteria is coachability, because there's no founder that starts knowing everything. You know, he or she might know very well some aspects of the business or the tech, but there's so much more to learn. They have to be coachable. Doesn't mean they have to agree with us all the time, but they have to listen and you know, make their own decision based on that. So I think those are really important aspects on the founder side. Now, on the technical side, we typically want to see companies that have an early prototype. We don't care if it's big, it's ugly, it's expensive, because we know how to deal with that. But it has to show that the science is more or less de-risked.
Right.
We're not funding R&D, funding development, yes, but not research, ideally. Even though it has not always been the case. So I mentioned cultured meat. There was definitely more work to do. But at least the feasibility was proven. They could do it. I'd say compared to a lot of funds, because the first checks are pretty small, 250 to 500K, compared to the few million we can deploy later in the same companies, we take more risk. But I'd say the challenge for us is more the later fundability of companies. And we've backed companies where there was just nobody who wanted to fund them after that, at the seed round. Like I mentioned, cultured meat and some other alt protein companies. When we started backing those companies, people were just not interested in food tech. We couldn't find VCs to back them. And so we had to cobble rounds together from a bunch of angels that were kind of interested in the mission, had met the founder, were enthusiastic. But sometimes you're just not trending, not in fashion for some categories, and you have to just deal with that. So we try to be a bit more conscious about the fundability later in the journey, but we also know there's some funding gaps, like in Europe for growth, for example. So that's my 2 cents on it.
Awesome. And how about you, Mark, at World Fund? Because you do, like, you know, we were just discussing that you're an investor at a Finnish quantum computing startup, IQM, that you do really deep tech, but then you also have software in your portfolio. So, like, how do you evaluate the VC fundability?
So, yes, we do everything from live tech to really deep tech. So really across, also sector agnostic. But the first thing we do is to evaluate the climate performance potential, our CPP, which is basically a methodology to quantify the carbon reduction potential of companies. So this is a North Star for us. So really science-based here, that we are investing into the solutions with the highest impact. So we have a dedicated team also doing that. This is the first hurdle. then, of course, team, I can only second what Benjamin was saying. And then on the tech side as well, it must be de-risked. We can't fund R&D. That's not possible. There are other possibilities to fund that. There's a big grant. There are a lot of grant schemes which you can use to fund your company, non-dilutive funding. But what we want to see is that there's an opportunity to, of course, increase the value of our shares over time. You can do that with revenue. You can do that with inflection points in technology. Yeah? So, and that must be a clear route here for us to see also our returns. And that also normally goes hand in hand with market, industrialization, market adoption. Yeah? And it must be also technology which is for the future, not project-based, but it's scalable. Because we see a lot of good solutions which are really needed for climate or to tackle climate change, but they are not, we see, fundable because, or in our opinion at least, because they are not scalable. They will maintain that project type every time you sell one of these solutions. Yeah. So this is where we really look at it. And of course, also from our side, we have a very scientific team with a lot of PhDs. We have more engineers and scientists than we have business people on our investment team. So we really think that's crucial to really understand the potential of these technologies.
Yeah, absolutely. Do you want to still, Adam, comment on this? But we sort of covered it when you were a little bit.
Yeah, well, just on one aspect. I mean, we're really focused on Series A investing, right? And what you look for at Series A, simplistically, is product market fit, right? You're looking for evidence that they're solving a real pain point for companies, and you've moved on from kind of proof of concepts into multi-year contracts with the ability to upsell. That's kind of how Series A B2B software is looking at. That can actually be really tough in climate tech because although, you know, there's been a lot of talk about climate over the past couple of years and you kind of makes you feel like it's been there for decades and decades and it's a mature market, with the exception of the kind of the infrastructure side and the EVs and those kind of big tickets. A lot of the technology side is still very young. They're fairly nascent markets and there's a lot of growing to do. And part of that is the customers, as Heidi said, who have made these pledges and actually don't really know how to do it and don't really know what they're looking for. So they're kind of picking bits of solutions to try and see what they want. And that can make product market fit for these startups very hard to achieve, because how do you do it when the market doesn't know what product they need? So there's a whole kind of education piece. But the one constant, I think, across it all is the founders, right? And what you're looking for is kind of founders with the ability to create category leaders. And that's very hard to kind of do a tick box exercise to say, this is what it looks like. And a lot of it is subjective and a lot of it is gut feel. But the one good thing about early markets is we don't really have lots of category leaders yet. So there's opportunities out there for them to go and grab them.
Exactly.
If I can just add something there, that I 100% agree with that, and I think that's one of the challenges that we see as well, is that we are a seed stage fund, which means they need to have follow-on investing and they need to have it within 18 to 24 months, ideally. And, you know, there's a lot of, and from most of our startups, the follow-on funding comes from generalist investors, which means that there aren't enough, I think, kind of climate tech specific investors doing hardware and deep tech at that stage, as you mentioned before as well. And I think this is a real challenge because we want to make sure that our companies will appeal to the generalist investor like Albion or anyone else kind of doing Series A and plus. And that's where I think it becomes riskier to do more of those bets. And this is why we're trying to balance our portfolio and make sure that, you know, the hardware bets we do will be generalist investors' interest, or will be in their interest at the time that they're kind of mature from our fund. But there's still a little bit of a gap, and like I said, there's still some uncertainty whether that is actually happening.
Right. Exactly. Yeah.
We have experienced this problem from early stage to growth stage, let's say from Series A to Series B, because the investor mindset, the characteristics of the investments change, and these growth investors, they really, at least in the past years, had really big problem with hardware investments. They're not fitting in their napkin or in the valuation napkin. And that's why we decided also be a multi-stage fund, not only an early stage fund, but a multi-stage fund from seed to Series B to gap that bridge, because it's not a felt gap, it's also a gap where there's a lot of research about, and it's really, really there. And it's one of the, I mean, there are a lot of challenges, but it's definitely one challenge to name for companies doing hardware-heavy stuff.
Yeah, and do you think this gap that you are mentioning, the later stage, you know, is it like Europe specific, or is there more capital? Like, yeah, is it Europe specific? You want to comment, Ben?
I think if you kind of sum it up, in climate tech, as you're growing, your company ends up looking either like a SaaS company, and then that generalists understand, they see unique economics, they recognize the model, or it looks more like building cathedrals, giant, super expensive things. And like, let's say you do a nuclear reactor, it's a bespoke project costing billions of dollars. Or if you do, even if you know, I was mentioning alternative protein, where you need to create new facilities, your own factory, because you can just put that into, you know, an OEM that will do it for you, because you're going basically to need equipment that's not just food grade, but actually kind of medical grade to put in the food industry. So, of course, there's everything in between, but the problem is that if you look like a SaaS company, you can find more funders. If you look more like Cathedral, then you're talking either to private equity, or you just don't have suitable funding models. Even if you're deploying kind of mature tech, it's not exactly the topic here, but if you're deploying like wind and solar that are very established, the investors are looking for a particular return profile, and this is not VC type return profile. And when you get close to that returns in new types of categories, you just don't have really the right funding options yet.
Yeah, I can personally agree with that. Something that I've been thinking a lot recently is these first of a kind plants that need to be built, like these cathedrals, what Ben was mentioning.
A church, first of a kind.
Exactly. Yeah, and like that, it's a really kind of a weird risk return profile, which doesn't really fit to any of these funding buckets from, you know, VC, early stage growth, late stage funding, venture debt, or commercial debt, or project financing. But there's something in between that we should bridge. We still have like 3 minutes time, so let's do like a quick like firing questions of climate tech. Like one area of interest that you are super excited about, where you would like to see, you know, these possible entrepreneurs in the audience come reach out to you and pitch. What would that area of interest be in climate tech for you? We start from Adam.
I mean, I'm not sure this is the most original answer, but the one area where I see a lot of opportunities, and we invested in at the end of last year, is generally the energy transition. And for us, the role that software can play in the energy transition. And that's because it's just, I mean, when you talk about market opportunities, right, it's one of the biggest markets on the face of the planet that needs to kind of change completely over the next few years. And it's a market that for the past 50 or 60 years has just been set in its ways and does what it does, had no interest in changing. And the one thing about the disruption of last year and the energy crisis is it finally made a huge, massive market look around for disruptive business models and look at alternative ways to do the business, because it had to. And out of that, there's just a huge scope for opportunity.
Sorry, I have to cut you short so that we have time to go through everybody.
It was quick fire. Sorry, forgot it was quick fire.
So, like I already said, I think when we look at energy, the electricity part, technology-wise, most things are solved. It's about business models, yeah? But on the heat side, we still have to do a lot because that is also a major emitting sector in our industry, and we have to decarbonize that. And I would love to see more innovation, or the innovation we have seen in electricity side, also on the heat side.
Nice. Heidi.
And I would say there's been a lot of course, focus on carbon, but we're much wider than that. So I would say that biodiversity and water are two things that I'm increasingly interested in and love to see more deals in.
Awesome. And Ben.
So I have a few. I'd go also with ocean tech, critical minerals, so going down in the supply chain for
Nice.
everything energy and everything transportation. And one that on which we've been very active since the beginning is all food tech, food and ag. We've seen generations with the first alt protein, then the second generation alt protein. Now we also backed a number of companies doing tools for alt protein, like bioreactors, growth medium.
Awesome.
And overall, we like to be surprised. We fund new things all the time.
Yeah, awesome. My focus is industrial heat. Okay, well, thank you so much for joining Ben, Heidi, Mark, and Adam. This has been wonderful. And thank you, everybody, for joining here early morning. We hope that you learned a ton from these insights, and you can utilize these and go build your climate startups or even raise new climate funds and tackle the climate crisis together. Thank you, everyone.